Hey guys, Seeney here from Australian Wealth, and what an insane week it has been for Tesla stock. I made a video only a few days ago talking about Tesla stock at $1,200 and now it's at $1,500 a share, which is just crazy. So I think it's worth looking at the bull and the bear case for Tesla. Okay, so it only seemed like a couple of days ago that I was just filming a video talking about Tesla at $1,200 a share, and since that video it has risen to over $1,500 a share, which is about a 30% move, which is crazy. Especially for a stock that has run such a long way in such a short period of time, to make another 30% move is pretty remarkable. So with so many investors pouring into Tesla stock, I think it's worth talking about some of the things that could go right with Tesla and some of the things that could go wrong so that people can make educated decisions. So of course, as usual, this is not financial advice. I am just some guy on the internet and I don't know your personal circumstances. So you need to do your own research when you're buying into companies such as Tesla. So in this video, we'll lay out the bull case for Tesla as well as the bear case. So the first thing that you need to think about when you're investing in Tesla is whether or not you've smashed the like button and subscribed to the channel. It's really important, helps to get the videos out to a lot more people so that they can get hold of this information and make some informed investment decisions. So we'll start with the bull case. There's a lot of parallels between Tesla and Amazon. For a long period of time, Amazon was considered highly overvalued. But of course, over time, Jeff Bezos and the rest of the company executed incredibly well, and it's grown more into that valuation, and the stock has continued to rise. I see a lot of similarities here with what is currently happening with Tesla stock. It is currently insanely overvalued from what the company is currently doing, but I think there's a lot of potential there for growth in the future. So let's break down some of those things. Now, the very first thing, which I think is one of the biggest things, is that Tesla is miles ahead of the competition when it comes to the electric vehicle space. Now, this is an ongoing trend. I think eventually internal combustion engines will get phased out and will be more in favor of electric vehicles. Now, the reason that I think this is that so many governments around the world have a push towards this space to create a cleaner environment for everyone. So not only are they way ahead of the rest of the competition, but they're also going to have the backing of the government pushing the industry in that direction. So Tesla in this space is 100% in the lead against pretty much every single other electric vehicle making company, and even those that don't make them yet that want to. The range on these cars is better, the acceleration on these cars is better, and the price point is much more attractive than anyone else playing in the electric vehicle market. Now, in business, it always comes down to better, faster, cheaper, and Tesla has this going for them in spades in the electric vehicle market. So a lot of these larger automakers like Ford and Volkswagen are way behind when it comes to manufacturing electric vehicles, and it's going to take them years to get anywhere close to where Tesla is now. So they have a real first mover advantage, and I think that that's something really important to note. Now, the second thing, which is such a driver of Tesla, I think in the future, no pun intended, is that their self-driving capacity is also beyond any other company. Tesla has clocked up more driving data than any other competitor, and it is not even close. So Tesla's nearest competitor is a company called Waymo, and they've clocked up over 20 million miles of real-world driving. Now, Tesla, on the other hand, has collected in excess of 3 billion miles of driving data. So that means they've collected more than 150 times worth of data compared to their nearest competitor. And everyone that knows anything about autonomous driving and AI knows that data is the name of the game. The more you can collect, the better you can make your algorithms and the more precise you can make them when they're driving. So at this point, they're also leagues ahead in self-driving. So they've not only got a head start on manufacturing electric cars, but their self-driving capacity is incredibly far ahead compared to the competition. So the big advantage of being this far ahead in both of these respects is that they have a massive first mover advantage when it comes to autonomous taxi networks. Now, this is something that I think a lot of people see in the future, but I don't think they realize how much this is going to change the world. When Tesla owners aren't using their cars, they'll be able to have their cars work for them. While someone's at home doing some work and they don't need their car, they can send that out to go and pick up passengers and operate as a taxi. So for the first time for the average person, a car suddenly becomes a true asset instead of a liability. You can actually make money from purchasing a Tesla if this rolls out into the future. Now, this is obviously something that Tesla will take a cut of, which is a very smart business model and makes it much more like a tech company than an automaker because of the incredible amount of scalability that you can do, and you can have more software type margins on products. So I think the ability to do this alone will drive so many people to purchase Teslas because it means they can actually make money off their car instead of just buying it and lose money. So Tesla's revenue growth rate at the moment in the last 12 months or so has been roughly 31 to 32%, which is a remarkable rate, especially for a company as large as Tesla is now. So they've collected over $26 billion of revenue in the last 12 months, which is a great figure. Having said that, one of the biggest problems that many automakers run into is gross margins of their cars. So at the moment, the production of Tesla cars, the gross margin is roughly 20.9%. So some investment funds believe that over time, Tesla is going to increase their gross margin and be able to collect about 40%, which is a big jump. So if Tesla can achieve a gross margin of about 40%, that's going to significantly enhance the profitability of Tesla. This will obviously mean a lot of extra innovation, but it's something that the company is definitely capable of based on past performance. So let's assume that Tesla can maintain this growth rate of roughly 31% for the next 5 years. So that would mean that their revenues are roughly $120 billion a year. And if they can achieve a gross margin of 40%, this means that the company will make profits of roughly $48 billion a year. So this also doesn't factor in solar, which is going to be another great part of their business, or the creation of the robo-taxi network, which would be an even more insane margin. This is just the cars alone. So for Tesla, if we apply a reasonable PE ratio of 20 for 5 years down the track, it's quite a real possibility that Tesla could have a market cap that is close to $1 trillion. Adding the potential of robo-taxis into the equation here, if Tesla can execute flawlessly over the next 5 years, a market cap of $286 billion looks like it could have significant upside if all of this plays out. I see a bull case without robo-taxis of roughly $4,500 a share to maybe $5,000 a share. But with robo-taxis, I think that the market drastically grows, and I think you could see a valuation of $7,000 to $11,000 a share. So this is all well and good. But what if Tesla can't execute on these plans? I think it's also important to look at the bear case. So we have to remember the time that we are currently in. We're in the middle of one of the harshest economic downturns in recent memory. So I think at this time, a lot of people are tightening those wallets and they're not spending as much money, especially on things that they don't need. Unless we see a V-shaped recovery, I don't think that the demand for new cars is going to be there. I think it's going to be significantly capped as people are going to be more likely to save for a rainy day. So as we've seen this year, there's been a significant drop in demand for new cars. And I think that this could potentially impact Tesla's ability to generate free cash flow. I don't believe that Tesla would have any trouble raising money in the future. Having said that though, if they do need to raise cash, that could potentially dilute shareholders' equity, which could be a real issue for returns in the future. So let's assume that Tesla can only grow revenues at 5% a year. I think that over 5 years, it's a bit unrealistic to say that they're going to be losing revenue, but I think 5% due to the flattening of demand over 5 years and the current market conditions that the world is in. Another thing too that is not absolutely secured is that Tesla might not be able to increase their gross margins. They might remain about 20%. So that in a bear case, that's something we would have to factor in. And as other players begin to enter the market, they may be forced to drop pricing to increase their competitiveness. So let's assume that that remains the same. The other thing is autonomous taxi works might never actually work out. The self-driving may never actually be good enough. This is a technology that is not yet to be proven and is of course subject to a lot of regulation. So I think that's really important for a bear case that the autonomous taxi network might never actually come to fruition. So based on these figures, in 5 years' time, Tesla would be collecting revenue of roughly $33 billion, which is currently an increase from now, but not a drastic increase. So with an operating margin of still at 20%, that gives the company a profitability of $6.6 billion a year. So with this low amount of growth, that 5% rate, the PE ratio would be much lower than a 20. So let's do 20 for a fair comparison to the bull case and also a realistic comparison. So with these figures, at a PE ratio of 20, the company would be roughly valued at $132 billion a year. With a lower PE ratio in line with other automakers, let's say 10, the company would have a rough valuation of $66 billion, which is a significant discount from where the share price currently trades at. These figures would value the company at around $710 a share, and in the worst case, $355 a share. So with the share price currently over $1,500 a share, if Tesla can't execute on all of these things, then there could be a dramatic decrease in the share price. So that is something you have to factor in. Will Tesla actually be able to deliver on these numbers, and will they be able to bring their autonomous taxi network into creation? So it all comes down to execution. So if they can innovate, bring costs down, increase those margins, and continue to grow at a 30% clip, then I guess we'll see a great share price in the future for Tesla. But if demand tapers off, people spend less on new vehicles, and Tesla can't execute on a few of these things, then there's likely going to be quite a significant drop in the share price. So where do I see the stock price going? So personally, I think the answer is somewhere in the middle. So Elon Musk has a little bit of a track record of over-promising and under-delivering. Now, this is not to say that Tesla hasn't done some pretty remarkable things, because they absolutely have, and I think they're completely changing the game in the electric car space. So I lean more towards the bull side of Tesla than the bear side for a few reasons. So I think, even knowing Elon Musk often over-promises, he's a proven innovator. And I believe that they'll continue to increase their gross margins, and I think they'll increase their profitability over time. And whilst demand might be slow right now, I think in the next few years, as we get out of this recession, we're going to see an increase and an uptick in demand. And I think especially for a product as exciting as Tesla's, there is definitely going to be demand for their cars. Realistically, I think shareholders can probably see a share price in the next 5 years of around $3,500 to $4,500 if Tesla can execute really well. This could potentially be even higher if the autonomous taxi network can roll out and start becoming profitable in the next 5 years also. Right now, I think a valuation of $1,500, based on what Tesla has right now, I think is a little bit excessive. However, if you can see the longer term goal that Tesla has and what they're going to be doing in the future, and you believe that they can execute on that to a T, then maybe Tesla is a great buy at $1,500. I see certainly a lot of other people have thought about that also. So remember, if you're investing in a company like Tesla, it's really important that you have a very strong stomach, because we've seen this company go from everywhere. So if you can get your shares at a really strong valuation, then it's worth doing. But just remember, it could go up a lot, it could go down a lot. It's just something that you're going to have to keep in mind, probably put in the bottom drawer for a few years, and then come back once Tesla has executed on all their plans. So what do you think? Do you think that Tesla is going to be able to execute and we're going to see a much higher share price in the future? Or do you think Tesla is way overvalued at this point? I would love to hear your comments, so please leave a comment. Make sure you like and subscribe to this channel. We're bringing out a lot of new videos about stocks, finance, real estate, lots of different topics to do in that space. So thank you guys so much for watching, and we'll see you later.